Alrighty. Good morning, everyone. Today is Saturday, November 11th, 10:31 a.m. We are doing our weekly trade review. However, I'm going to always start our live off with two songs. So the first song I'm going to play is just a random song. The next song is going to be a song that I hand selected, that I want to hear, that I want you guys to hear, rather. And I'm going to do this just to give people time to get in the chat, get settled, and all that kind of stuff. So after these two songs play, we're going to get started. So here go our random song of the week.
Hey,
DJ G. Introverted because my purpose is way more than you think. Cup full of commitment is way more than you drink. If I ever wrote a letter to myself, I'd write until I ran out of ink.
Without Wings by DJ G. Angel Without Wings by DJ G. That is song number 1. So now we're going to listen to my song of the day. Song handpicked by me that I just want you guys to listen to. So here we go. Our song of the day is called The Intro, Lucy's Intro by Louis J. Let's get into it.
My bed, shawty sitting up, playing in my head. Dave Chappelle on the TV screen every night. Shit like daily routine. Life too crazy, need to laugh at something. Go hard, better mash that button. Come here, girl, let me flatten that stomach. Back to first take. Argue with the TV, cause it's Stephen A. Trying to tell the players stay away from weed. Catch me blowing trees any given day. And I just hooped while I was high, and I feel great. Just ran into a childhood friend. I ain't seen him 5 years the other day. Caught up like it's another shit, still the same. But he had a kid, I had to learn his name, damn, right? Back to a side of town like the old days, really.
Yes. That is Louis J. That song is called Lucy's Intro. So I know why you're here. We're here for the trade review. So this is something I'm going to do every week moving forward. But before I do get into the trade review, there's a few things I want to talk about. So first thing I want to talk about is moving averages. Someone asked me about moving averages. Next thing I'm going to talk about is new traders and traders who can't trade full time. Third thing I'm going to talk about is trading rules. Fourth thing I'm going to talk about is my first week trading with a prop firm. Fifth thing I'm going to talk about is trading transparency. A couple of traders that I want to give some shout outs to. And then finally, we're going to end this live with a full trade review. So let's just get into it. I'm going to hop right into it. So first thing first, moving averages. Someone asked me about moving averages. So I want to give you the book definition, and then I'm going to give you my definition. And then I'm going to talk about why I use them and how I use them. So the most common moving average is a simple moving average. Okay? Simple moving average. Just go to read more. Definition of a simple moving average is a price-based lagging or reactive indicator that displays the average price of a security over a set period of time. A moving average is a good way to gauge momentum as well as confirm trends and define areas of support and resistance. Essentially, moving averages smooth out the noise when trying to interpret charts. Noise is made up of fluctuations of both price and volume. Because a moving average is a lagging indicator and reacts to events that have already happened, it is not used as a predictive indicator, but rather an introspective used for confirmation and analysis. Okay? That is the definition of a simple moving average. My definition of a simple moving average is one price reflected over a series of candles. I put it to you that way. Is one price, one number reflected over a series of candles, or over a series of minutes, over a series of hours, over a series of days, over a series of years. It's just one price. So if you was to take the last 10 years of the S&P 500 and you want to get one price, the average price of the last 10 years, that's all a simple moving average is. Okay? That's the simple way of defining a simple moving average. Next thing you're gonna see a lot as you grow into your trading career, you're gonna see the term EMA, an exponential moving average. Okay? Most people use simple SMAs or EMAs. Sometimes you're gonna see DMAs. We're not gonna get into that today. But I'm pretty sure once you start seeing SMA more, you're gonna see EMAs more often. Most people, most traders, active scalp traders, they use EMAs. So EMA, an exponential moving average, is a specific type of moving average that points toward the importance of the most recent data and the information from the market. An exponential moving average is just like its name says. It is exponential, weighing the most recent price more than the last recent price. Okay? So, the simple way to define that is an EMA versus an SMA is an EMA, it gives more weight to the most current price. The very most current price, this means more in the calculation. So let's say you got a 10 period moving. No, let's say you got a 4 period moving average, right? So it's gonna take these 4 candles, 1, 2, 3, 4. It's gonna add them all up and it's gonna divide it by 4. And then it's going to take into account the value of today, the current value of this candle that holds more weight than this candle. Okay, so it's again same thing. Is price reflected over a period of time as one number. However, the price will be slightly different because the most current price holds more weight. Okay, and then last but not least, we're going to talk about the moving average that I use. I use a volume weighted moving average. I don't use simple weighted moving averages. I don't use EMA. I don't use DMA. I don't use Hull. I don't use none of those moving averages. I use one moving average. That's what you see on my charts all the time. And that is a volume weighted moving average. Now again, a volume weighted moving average is the same thing as a simple moving average. However, it just takes into account the volume of said time frame. Okay? So again, we on ES here. Go to a daily chart. So I'm live, so my computer is kind of laggy. But anywho, so let's say the days where the volume is much larger than another volume, it takes that holds more weight. Okay, so again, daily chart on ES. I don't trade with volume on my charts because I use a volume weighted moving average. However, I'm going to put the volume on my chart so I can explain it much more better. Okay. So this is 30 days worth of price action. This is the last month on ES. Okay, see, I've been active. Let's say we take again a 4-day moving average, a 4-period volume weighted moving average. This day here on November 9th, it had the highest volume. This downward pressure right here, it shows that this would mean that it's going to affect the moving average more. So again, let's talk about my specific moving average that I use. The volume weighted moving average that I use, that's on my charts. That's always been on my charts. That's been on my charts for years. That is the 93 period volume weighted moving average. That is the moving average I use. That is the moving average I trade against. If you watch any of my trade replay videos, you'll always hear me say it's above or below the moving average. Or if I'm doing a reversal type trade, I will always say we're going to trade it maybe back towards the moving average. Moving average is very important to me in my trading strategy, and specifically the volume weighted moving average is the most important thing to me. And why do I use the 93 period? I use the 93 period moving average because I'm explaining it in very good detail. Let me get my text. Okay, so 24 hours in a day, right? 24 hours. If you divide that by 60 minutes, okay? That gives you 1,440 minutes in a day. Okay? That's in a 24-hour period. That's the first thing. Okay? Second thing, and again, I'm just telling you the exact reason why my calculation is this calculation. The futures market is closed every day for 15 minutes. Okay, so, oh, no. Let's go back. So you divide those 144 minutes a day. I trade the 15-minute chart. That's the chart. That chart is what my entries and exits are on. The 15-minute chart. So I take that 1,440, right? I divide that by 15. That's going to give me 96. 96. Okay? So, that's going to give me 96, right? Next, the futures market is closed every day from 5:45 to 6 p.m. So that's 15 minutes. I'm putting it in here, 5:45 p.m. to 6 p.m. The market is closed. Every single day. The market is closed. Okay? So, with that being said, that gives us 95 candles. That gives us a 95 period moving average. Okay? And mind you, I said I use a 93. So I'm gonna continue to tell how we get there. Okay, so that gives us 95 because the futures market is closed every day for 15 minutes. There's no price action. There's no data. There's no communication. So that brings us from 96 period to a 95. Next, I do not consider. I'm gonna say I don't consider. I allow the open and closing candles. Oh shit, I can't spell. Open and closing candles to close. So what does that mean? The opening candle and the closing candle. The first candle at 6:15, that candle closes at 6:15. That candle is not valid until it closes. Anything can happen with the market until the candle closes. Once it's closed, it's valid. It could never be changed. Okay, so I allow that. The futures market opens up at 6 o'clock. So from 6 to 6:15, that is a candle that I have to allow the close to be valid. And the same thing with the close. The 5:45, the 5:30 to 5:45 candle, that is the last closing candle on the day. I have to allow that to close before it's valid. So that gives me 93 valid candles that I base all my data off of. That is what my moving average is based off of. That is why I use a 93 period moving average. 15 minutes divided by 144 minutes a day gives us 96. The market is closed for 15 minutes a day. And then the open and close candle will have to close before it's valid. So that gives us 93 candles to work with. So that is why I use a 93 period moving average. If I use the hourly period moving average, if I was on trading off the hourly chart, my moving average will be different. If I was to trade based off the 5-minute chart, my moving average will be different. If I was to trade based off a 30-second chart, my moving average would be different. So that is why the moving average reflects 1 day of price One full day of price, I got that right here at one area. Okay, so that is how I use the volume weighted moving average, and that is why I use the volume weighted moving average. Let's move on to new traders. I want to take a quick second, talk to new traders and traders who can't trade full time. If you're looking to get into the market, I want to just tell you, don't rush. Be patient. If you want to do this for a long time, you got to act like you want to do this for a long time. You're not going to make $100,000 your first year, your second year, your fifth year. I'm telling you that right now. Slow down, be patient. Be patient. If you can't trade full time, don't try to make full time trader money. It's not worth it. You will always lose at the end of the day. Okay? Another thing I see, and I did it myself when I was a new trader. So I'm not bashing on new traders. Smaller time frame traders, the scalp traders, the super scalp traders. Shout out to Iman Trading. He coined that term. I have nothing against short time frame, 1 minute chart, 30-second chart, 5-minute chart, 2-minute chart. I have nothing against it, but I just need you to understand that trading is based off probability. So I need you to understand. So when you trading, I need you to look at charts. When you're looking at what time frame you want to trade, this is what you need to understand. The smaller the time frame equal the more trading opportunities. That give you more fake outs. Okay? I need you to understand that the smaller the time frame, it gives you more trading opportunities. And that gives you more fake outs. With more fake outs, that means you have more stop outs. That means you lose more trades because you're trading more. That's all. That's how this thing go. If you trade more, you will lose more. Okay? Now, the way you can mitigate that, if you want to be a scalp trader and you want to be a profitable scalp trader over a period of time, and you want to use smaller time frame, the only way, and this is just my opinion, and I'm speaking to new traders, the only way you will be profitable if you have a high win percentage. Okay, I need you to understand that if you trade small time frame, anything under 5 minutes is considered small to me. Super small. Anything under that, I need you to understand you need a very high win percentage. When I say very high, I'm talking 80% plus win rate. You may get away with 70, but you're not going to make real money unless you have an 80% plus win rate. That's if you're a super quick trader, you're in and out trades very fast, consistently every day. You putting on 4, 6, 7, 8, 30 trades a day. I need you to understand your strategy must be a high win percentage strategy. Now, on the flip side, and again, I'm still talking to new traders or traders who can't trade full time. If you can't trade full time, I don't think you should be scalping anyway. But if you can't, you need to switch over to larger time frame. Switch over to larger time frame, and I'm gonna tell you why. The larger the time frame equals less trading opportunities. That equals less fake outs, and that equals less stop outs. Okay? So I need you to understand the larger the time frame you go, you're going to trade less. You're not going to get in as many trades on larger time frame. However, you're not going to stop out as much either. I need you to understand that. You're not going to stop out as much. However, when you stop out, you will lose more money. So the way to mitigate that is you need a high risk reward ratio. You don't need a high win percentage. You need a high risk reward ratio if you trade a larger time frame. And that is how you be successful as a new trader. Okay, so you're going to see on YouTube, if you're intentionally learning, you're going to be on YouTube. You're going to see on YouTube risk reward 2 to 1, 2 to 1, 3 to 1, 4 to 1, 5 to 1. You're going to see that a lot. You're going to say, oh, you're not going to be successful unless your risk reward ratio is 2 to 1, whatever. That's BS. However, that is if you're trading larger time frames, you do need a 2 to 1 risk reward ratio, because when you stop out, it's going to put a dent in your account. And you need to understand you're going to be right less often. But when you're right, you're going to make a shit ton of money. A absolute shit ton of money. Okay? So again, I want to use this opportunity. I'm still talking to new traders real quick, and I'm going to show you guys something, and then I'm going to move on to the next. My next topic is trading rules. So a strategy that I want to show new traders and also traders who can't trade full time. I trade this strategy every summer. I don't have a chat pulled up, so I don't know if anyone's in here or not. So I trade this. I trade it every summer, and I only trade it in the summer. But this is the strategy I plan on teaching my son when he first starts trading. Okay? So it's based off the 60-minute chart. And again, this is for new traders only. Based off a 60-minute chart, you want a volume weighted moving average. Set your volume weighted moving average to 24. Okay? Why? Because it's 24 hours in a day. No. Yes. There's 24 hours in a day. Okay? So, you set your volume weighted moving average to 24. And then this is the trade, I promise you. Very simple. 9 o'clock, the candle closed. You will have a closing candle at 9 o'clock. If the closing candle closed, if the 9 o'clock candle closes above the 8 o'clock candle, you go long. You get long above the 9 o'clock candle. If the 9 o'clock candle closes below the 8 o'clock candle, you get short on the break of that 9 o'clock candle. So it's pretty much whatever the 9 o'clock candle says you go, that's what you go. Now again, new traders, you're going to trade less, but over a period of time, 3-4 months, you're going to make money. And I'm going to show you the results just for this week. Just what potential profits could have been. Okay? So understand, new traders, I'm only talking to you. This week started on the 6th. Okay? So we start here. No indicators, no technical analysis, no none of that. Okay? So here we are, November 6th. This is just this week. We go to our 9 o'clock candle. This is our 9 o'clock candle. This is our 8 o'clock candle. Right? Okay, boom. This is the close of the 8 o'clock candle. That's the close of the 8 o'clock candle. The 9 o'clock candle did not close above or below the 8 o'clock candle. That means you don't trade. There's no trade on Monday. Okay? Monday, no trade. Let's go to Tuesday. Again, we're going to find our 8 o'clock candle. 8 a.m. Right here. That's where we closed at. Yep, so we closed at 8 o'clock. Right here. This is the 9 o'clock candle. Did it close above the 8 o'clock candle? Yes, it did. Okay? So this is your entry. Right here. That's your entry. Okay? That's your entry. Now you're in a trade. Now, how are you going to manage this trade? How do you make money on this trade? You in this trade. What you need to do, you put your sell order literally at 1-to-1. I mean at 2-to-1. I mean, I'm sorry, 1-to-1 risk reward. Okay? So how do you determine your 1-to-1 risk reward? Your entry is the break of this candle. The break of this 9 o'clock candle. So the high of this candle is 43.8075. So your exact entry price is 43.81. So you in at 43.81. That's your entry price. Your stop is below this 8 o'clock, below this 8 o'clock candle. So the lower this candle is 43.7025. So that means your stop is 43.70. Okay? So now what you want to do is you take your entry, subtract it from your stop. So 43.81 minus 43.70. Your stop is 11 points. Okay? So that's your risk. That is your risk. Your risk is 11 points. So that means your reward must be 11 points. So your risk, is 11 points. So your reward, 11 points. Okay? So now, that's the trade. That is the trade. You have your entry, 43.81. You have your stop. And what's your exit? You take 43.81 and you add 11 points to it. So your exit is 43.92. So 43.92 happened here. Okay, so you got in on this 10 o'clock candle and you made money at this 11 o'clock candle. You're not sitting at your computer doing nothing, or you're at school, you're at work, whatever it is. Okay, that's Tuesday. Let's go to Wednesday. Find our 8 o'clock candle. Here we are, 8 o'clock. Okay, so this candle, the high of this candle is 43.99. So our 9 o'clock candle, did it close above 43.99? That's the only rule. This closed exactly at 43.99. And again, this is why rules matter. It has to close above. If it closed at 43.99.25, guess what? You have to take the trade. But it didn't. It closed exactly at 43.99. So guess what? You don't trade Wednesday. That is why it's important to follow rules. Let's move on. Thursday. Let's find our 8 o'clock candle on Thursday. Here we are. $8 o'clock. This is our close. Okay? 8 o'clock. That's our candle close, right? Here's the 9 o'clock. It closed above the 8 o'clock candle. What's your entry? Your entry is above that. Now, you see, based off the rule, you're supposed to got in. So you're in this trade. Where's your stop? Below the 8 o'clock candle. So you stop out here. So that's a 3.5. That's pretty much a 4-point stop. Okay? So on Thursday, you're down 4 points. Okay? Okay? So, you got 2 trades during this week, right? No, not yet. We're still not done. We still have Friday. But so far, You made 2 trades during the week. You're still profitable, by the way. You're still up on the day, and this is just with 1-to-1. You make the real money when you be responsible and you hold for 2-to-1. But we will get in that. We will get to that another day. I just want to finish this week over real quick. Okay, so Friday. Let's find our 8 o'clock candle. 8 o'clock, here we are. That's our 8 o'clock candle close, right? Our 9 o'clock candle. We close above or below. We close above our 8 o'clock candle. So where's our entry? Above this 9 o'clock candle. You have a limit order in above this candle. You going for work. You already started. You clocked in at 9:30. Your order is already in the market. Your stop order is already in the market. Your sell order is already in the market. Okay, so here, this is your entry. Where's your stop? Under the 8 o'clock candle low. That's the trade. Okay, so yeah, let's get our stop up. So let's do the math. Let's determine our risk reward. 43.83 minus 43.59.50. That's 23.5 points. Okay? That's 23.5 points. That's our risk. Our risk is 23.5 points. Now again, this is what determines, days like this is what determines if you make money or not. Because guess what? That reward needs to be 23.5 points. Or over time, you will not be profitable using this strategy. So again, your entry is 43.83.25. You need to add 23.5 points to that trade. That brings your target on this trade to 44.0675. I said 44.0675. My computer acting up. Okay. I'm lagging a lot because it's streaming. I probably need to get a new computer. There you go. That's where you get out. There's your exit. So you plus 23 points. Okay? So that's just 1 week. Now again, every week is not like this, but most of them are. Okay, so let's do the math. 11 plus 23.5 minus 4. You're up 30 points on this week. 30.5 points on this week. And that's what you working. You at work, you at school, you out playing basketball, you out enjoying life. You know what I'm saying? You put risk, if you put $50 risk on 30 points, that's $1,500. And again, you just have to hold. But again, that's a beginner's strategy, beginner's trading strategy. If you want to try it, give it a try. But again, it's profitable during the summer. I guarantee it. Okay, but just this week alone, you made 3 trades. You made 3 trades. You traded 3 days out of the week, and you made 30 points. So you can add your risk. We talk a future. So you trade in micros. If you trade in minis, 30 times 50, you have $1,500. If you trade in micros, you up $150. Again, you're at school, you're at work. That's a strategy you can do. You watch, you put your orders in, you put a bracket order in, and you move on. You go about your day and you make money. That is the exact strategy my son is going to be trading this summer. So yeah, okay, so let's move on. And And again, that is a strategy that I want to show you guys because that is a rule-based strategy. You know exactly when you enter. You know exactly when you exit. So you can go back and back test exactly what you should have done. And you can get real live results. And again, that is why rules matter. What's the best way to put this? Trading rules matter because is the only way you can truly measure consistent decision making. I think that is why your rules matter. It is the only way you can truly measure if your trading decisions are being consistent, if your strategy is being consistent. But you have to follow that strategy as is. So if your strategy is not written down, you're not going to be a successful trader. If you're not repeating the same thing every single day over a period of time, give it at least 200 trades. 100 trades is not enough. Give it 200 trades. You give one strategy 200 trades, and then you reassess. But as you trading, you have to look at that every single day. I do trading reviews every week, and again, this is why I'm going to start streaming these live so you can understand what it takes. Okay, so that now that's over with. Now we're gonna get into prop firm trading. My first week with a prop firm. So as you guys, I told a few people, but I'm with Trade Day. This is the prop firm I signed up with, and I've ran into some issues, but kudos to Trade Day. They do respond pretty instantly. Not instantly, but they respond within 48 hours. I would say that. I would tell you guys that. If you got an issue, you would get a response from Trade Day in 48 hours. So this is me. I had an issue, asked a question, intraday trailer and drawdown. Again, I do trade my own money also. I've joined prop firms for a reason that I'm not going to discuss right now. So again, they responded that same day, and then the next day he sent this. And this is still in the forum. So if you're a Trade Day member, you would see this. I know I'm Trading is a Trade Day member, and Josh Trades is a Trade Day member. So you guys would see this. This is me actually, and I followed up. I sent the email, talked to Trade Day support. Everything is all good, fine, and I understand what happened. So we took care of it. But every trade that I made with Trade Day, I made it in my own personal account. So Trade Day got their rules, and it's kind of weird, but it is what it is. That's just what their rules. It's prop firm. You know what I'm saying? So again, you don't want to trade prop firm money forever. Your goal should be to trade your own money. And again, if you follow your rules, trade your own money and you will be successful. That strategy I just showed you guys, a lot of prop firms, they're not going to let you enter trades before 9:30. But what if the 9 o'clock candle break at 9:20? You know what I'm saying? So if you got your own money, your own retail account, your own personal account, you can do what you want. But prop firm, you can't. So again, I don't know if many prop firms will even let you try that strategy I just showed. But again, if you still want to try and you're a new trader, get an account, get your own retail account, use it with micro contracts, and I think you need $25,000 per contract to cover the margin, and just trade one contract per day, and you'll make money. But yeah, so I failed the first eval. I had to get a reset. But that day, I failed the Trade Day reval because they auto liquidated. But I held that trade in my personal account. And the drawdown, if I would have hit my stop, I didn't expect Trade Day to just auto liquidate sale. But they did. But I held in my personal account, and the trade ended up going my way. So Trade Day stopped me out for a 50-point loss. Auto liquidate, by the way, it was their decision, not mine. I took a 50-point loss in the trade day evaluation and I failed. However, in my personal account, I made 30 points. I ended the day up 30 points. You get me? So it's just kind of one of those situations that, again, why rules matter. You have to follow your rules, and I have to follow trade day rules. I have to follow trade day rules, and that's just what I'm going to do. So with that rule being said, what they set that upon me, what I'm going to do is now with this trade day evaluation, I'm going to trade one contract at a time. And again, I trade more than one contract with my personal account, but it's no big deal. I'm just going to trade one contract at a time with trade day, and I'll just leave it at that. My next thing we're going to get into is, real quick, one more thing about prop firms. Due to the fact that I'm only going to trade one contract with this trade day evaluation, I'm going to give Apex a try. I see a lot of prop firm traders on YouTube trading with Apex, so I'm going to give that a try to see what that's like. I want to give it some shout outs real quick before I even get into trading transparency. Shout out iMan Trading. You are the reason I signed up for Trade Day. Your YouTube channel convey trust for some reason. I like how you exposing these fake traders on YouTube. I think your channel is dope. I like that you trade live every day. Keep doing your thing. I'm also going to be joining you with that live trading at the top of the year. And again, you would Trade Day, I would Trade Day, so I can't lie about nothing. Next is Josh Trades. Josh Trades, you're another transparent trader on YouTube. I see you doing your thing. He don't trade live on YouTube every day, but he do post a lot in his community tab. He's been on an absolute streak lately. So, yeah, keep doing your thing, Josh Trades. I'm watching you, see what you're doing. You keep that up, that LFG setup. Hey, I think you figured out a moneymaker. I think it's dope that I've watched you create that strategy over the last few months. So I watched your downturn that you keep referring to and all that kind of stuff. So again, you keep doing your thing. Keep being transparent. Hopefully one day I'll trade with you on live on YouTube. Same with you, I'm in trading. Same with you. Hopefully one day I'll trade with you live on YouTube. Next, Holding Trades. Shout out to you, young trader. You look pretty young. I don't know if you're in high school or not, but I'm going to tag you in this video, and I'm going to tell you to watch the section where I'm specifically talking to new traders. Get us a try, and I'm praying to God that you trade in Sim, because you're so new on the Sim account. But get that strategy that I was talking about earlier in a Sim account, and you will be shocked how profitable that strategy is. Anybody else who want to do that? Nicola NQ. Same, shout out to you, my boy. You was asking me a lot of questions that you were generally curious about, and we had a nice little conversation in Holding Trades comment section. So again, don't never feel ashamed to ask a question. Don't apologize for asking a question. If the question is not intended to be disrespectful, just ask the question. I see you doing your thing. I see you also posting your trades on YouTube. You're a new trader. Keep doing your thing. I just subscribed to you. So I'm going to be watching you over time. Don't give up. Holding Trades, don't give up. None of you traders, don't give up. It does take time to be profitable. If you put in the work, it will be there. And then last but not least, my guy Paul. Good friend of mine, my trading buddy. Me and Paul talk financial markets and everything else. Politics, family, life, everything. That's my guy. Consider him one of my good friends. Shout out to you, Paul. Maybe I probably bring Paul in live. We probably trade together one day on YouTube. But Paul trades options only. He don't trade futures. Okay, so now, last but not least, let's get into our trading review. What you're here for. I don't know how long I've been rambling, but let's get into it. The trading review is officially about to start. So if you're here for the trading reviews and trading review only, in the future, just fast forward or come towards the end. So let's get into these trades real quick. My first lag, so my computer's lagging. This is Tradeovate platform. I was gonna talk about this platform today on live, but I've been rambling for a minute, so I'm not gonna discuss that as of right now. So we're gonna look at these trades on the trade list, and then we're gonna look at it on the chart. Okay, so we're gonna go to Monday on the 6th. Monday on the 6th, November 6th. Let's pull up the chart. And I'm also going to show you guys how I set up my 2-channel theory. Okay, so we're not going to pull up the 6th. Let's go to the 5th. We're going to go to November 5th first, because this is what your chart, my chart, would have looked like on coming into the day on November 6th. So my strategy is pretty much like connect the dots. What I do is I just connect pivots. I connect pivots and I go from there. So this yellow line, 2-channel theory, this is my caution line. Okay, this is my daily channel. So what I mean by daily channel, these yellow lines on my daily channel, they don't move. They're locked in place. Okay? They are locked in place. They don't move. So that's one channel in my 2-channel theory. So these yellow lines don't move coming into the 6. Okay, so then I'm just putting some lines right here for right now so I can explain everything later. Okay? So I have a blue and a red line. If you look at if you watch my trade replays, you will see I always have 2 yellow lines, a yellow and a green line. Okay? Let me change this moving average. Again, remember I said I use a 93 period moving average. So that's my moving average. Okay. So, and again, my strategy is a rule-based strategy. I'm not going over my strategy. I'm just saying. So, this is Monday. All this over here is Monday. Okay? So, one of my rules, rule number 1 for me and my strategy, I don't trade before 10 o'clock. I don't make a single trade before 10 o'clock. So what I want to do, come over here, and again, I'm back testing. I'm reviewing. 10 o'clock, right here. This is our 10 o'clock candle. I don't do nothing until that candle closes. So when I'm doing my trade review at 10 a.m. in real time, none of this was here. None of these candles, get a vertical line. None of these candles were here. See that thick vertical line right there? Everything past this line, it was never there. It wasn't there at that point. So when I'm when I'm doing strategies, when I'm building strategies, that's why you have to have rules, just for you can back test. So you know what you're supposed to have done in the moment. Even if you didn't, you will be able to recognize the mistakes. Okay? Anywho, let's move forward. So it's 10 o'clock, right? This is what the chart looked like at 10 a.m. We have nothing going on, right? So right here, rule number two. A signal is when the candle closes above or below the previous candle. That's another one of my rules. So here, 10:15. What happened? The 10:15 candle closed below the 10 a.m. candle. So that's a signal, not an entry. It's a signal. Okay, so what I'm supposed to be doing is looking for short. Why? Because this 10:15 candle closed below the 10 a.m. candle. So that's signal number one, where I'm supposed to be looking at short. Signal number two, where I'm supposed to be looking at short. We are below the moving average. If you watch my trade replay videos, you will always hear me say above or below the moving average or near the moving average. Moving average plays a massive role into my trading strategy. That's why I use a volume weighted moving average specifically. We below the moving average. We got a 15-minute candle close below the previous 15-minute candle. That's two things going for me. That's two people telling me it's time to short. Okay? Reason number three. Remember I told you these yellow lines don't move? It's two channel theory. So this is my daily channel. This green line and this red line represents my intraday channel, and this yellow line represents my daily channel. Okay? These don't move during the day. When the stock market closed, when the futures market closed at 4 o'clock, then it moves. Okay? So reason number three, we are below our daily channel. This is our daily channel. This yellow one, we are below our daily channel. So that's three reasons on this chart. This chart is telling me you better get short. I'm not making a decision to get short. My rules made the decision for me to get short. The chart agreed with my rules. But anywho, let's keep it going. So that's three things. Three people, three things, three reasons, three confluences, however you want to put it, telling you to get short. Now, what's my entry rule? Okay, what's my entry rule? Our entry rule is when a 15-minute candle closes above or below the previous 15-minute candle, our entry is the break of that 15-minute candle. Okay, so that's rule number three that I have. You can't enter in the middle. You can't enter up here at the top of the candle. No, you must enter on the break. Same way like I said earlier for new traders with the 9 o'clock strategy. You must enter on the break of the 9 o'clock candle. If that 9 o'clock candle does not break, you do not enter. Same rule apply here. 10:15, the low of this candle was 43.75.50. The low of the 10:30 candle was 43.75.25. So it didn't break. That means you didn't enter. Okay? So based off the rules, you're waiting. So now, this is what our chart looks like. Okay? So this right here is order entries for me. This is why I love TradeStation. I can take it off if I want to, but I keep all my orders on the chart. So right here, and now you can see trades short to whatever. So I'm short on this candle. Anywho, why did I get short at 12 o'clock? First off, let's go to 12:47. I was short 43.79, 2 shares. I was short 2 shares at 43.79. This is what the chart says. Okay, see that? Short 2 shares, 43.79. Okay, so why did I get short here? As you can see, look at the candle before. This 11:45 candle closed below the 11:30 candle. We below the moving average. We below our intraday channel. So guess what? The same three things that was telling me to short earlier in the day, guess what? Just because it's later in the day at 12 o'clock don't mean nothing. You gotta get short. You take that short. And then there's that trade. And then you make, what's up, boo? And then you make $320. That's the trade. That's it. Okay? So I took 2 trades on Monday. Let's look at trade number 2. Mind you, we're still on the 6th. Here we are. At 1:36 p.m., I was short ES. Okay? So 1:36. Here we are. This is what our chart looks like on this trade. Where I got short 43.76. I got short, right? Why did I get short? Once again, this 1245 candle closed below the 1230 candle, which is below the moving average, which is below our daily channel. So the same 3 reasons to tell me to get short on a trade that worked out, it did it again. So what am I supposed to do? I take the short. And then what you do, you make money. How much money? $375. Okay? Trade number 3 on a 6. We are here. So now, this is what the chart looks like on trade number 3. Oh, hold on. I explained trade number 3 just now. Trade number 2. The trade I just explained was trade number 3. This was trade number 2. So this 1230 candle closed below this 1215 candle. You see that? And we got the break at 1245. So when we broke this candle, this 1230 candle low, that was our entry, and then we got out. Okay, and then this trade right here, this 1245 candle closed below the 1230 candle. We're below the moving average. We're below the intraday channel. That's our break. We got in, and then we got out on this channel. That's all 3 trades on Wednesday. So if you add all 3 of those trades up, I said Monday. 325 plus 375 plus 325. That's $1,025 after commissions. That's $1,025 after commissions. Okay? So, that's the 6. And you go to periodical returns, $1,010 after commissions. Okay, so trade list. We're gonna go to the 7. We bought at 11:27 a.m. We was long the market. We were long ES. Okay, so let's set up our chart again. And this is what I do every single night before I go to bed when I'm reviewing my trades. This is what I do. So, with this yellow line, how do I keep this channel going? I take my previous pivot and I move it forward. My yellow line goes to day high to day low, day high to day low. And then my intraday channel, it doesn't matter right now until the market's open. Same thing with our upper end of our channel. Unlock it. And you go high to high. High to high. So there we are. That's our daily channel. Coming into November 7th, that is what our daily channel look like. Them yellow lines will not move. So let's move our chart to November 7th. So I'm going to take a green, your breakout candle, you connect it to the highs until 10 o'clock, mind you. All this wasn't here. So 10 o'clock, you want to find your 10 o'clock candle. Connect it. That is what your chart looked like in real time at 10 o'clock. Okay, so at 10 a.m., okay, so at 10 a.m., this is what your chart looked like. This is what my chart looked like at 10 a.m. None of this was here. Okay, so 10 o'clock. When did I enter a trade? My trade list says on November 7th, I entered a trade at 11:27. Let's go to the chart. So we are here. So at 10:15. So I'm gonna explain the trade. Signal number one. This 10:15 candle closed above this 10 o'clock candle. We are above our moving average. So that's two things, that's two people, two reasons, two confluences telling us it's time to go long. So what I do, I put my order in at the break of this 10:15 candle. Okay, so at 10:15, this is what our chart looks like. So at the break of this 10:15, I enter. And as you see here, buy two at 43.88. What was the high of this candle? 43.83.25. I got filled at 43.88 because I do market orders. Okay, but anywho, that's my fill. I'm in the trade and I'm out the trade on the very next candle. If you watch my trade replay on the 7th, you can see that video. But that is trade number one. Okay? Trade number two. Oh no, I only made one trade on the 7th. No, I didn't. I made two trades. Okay, trade number two. I entered my next trade. So I was in one trade at that's a wonky feel. That's a wonky feel, but anywho, I can't explain why it was like that. I market ordered, so that's probably why my average was that high. And that's the downside to market ordering. It was probably running. But anywho, we entered another trade on the 7th at 11:31. Yeah, 11:31. So let's see what. 10:31, I'm sorry. I keep saying 11. 10:30, this candle, 10:30 candle closed above the 10:15 candle. Yeah, correctly. Yes, we are above the moving average. And now also, we are above our our daily channel. So we broke out of our intraday channel and we're breaking out of our daily channel. So that's three people, three things, three confluences telling you to go long. And trades like this is where I would, every time I get to all three of my buddies telling me to do something, I go big. Not big, but I put a little more. So this is where I will trade 4 contracts. But again, let's not get into none of that. But you take the trade. That's trade number 2. So trade number 1, you only had 2 of your buddies telling you to go long, and you listen to them, and 2 of them turn out to be right. And now on the second trade, 3 of your buddies will tell you to go long, and you listen to them. That's all. Your rules are your buddies. That's what rules are. They're your buddies. They're your friends. They keep you in the markets. Okay, so those are 2 trades on the 7th. Let's move on to November 8th. I'm going to set the chart up again. And I'm telling you guys, I do this every single night. If I trade or don't trade, this is what I do every night. So, I will take this. This pivot is a lower high. So I don't move this. This stays. However, I take this one, bring it to the high. Same with the lower end of our caution. I take that. We got a higher low here. So what I do, I take that and I bring it over. The red and the green, I just let it be to the next day. So let's move our candle, move our chart forward to the 8th. We got 2 more days left, and then this live will be over. So this is what our chart looks like coming in on the 8th. And again, you should have rules based on how you set up your chart. If you don't, you're not going to be profitable. I'm telling you that now. So, and you just connect the pivots. You take the high days, you connect it. So now we got our lows, previous day low. One day in our next webinar, I will get into my trend lines and how I draw them and why I draw them the way I do. But this is not at the low. That's the low. This is the low. Okay. So 10 o'clock. Let's find our 10 o'clock candle. Okay. So here we are at 10 o'clock. Okay, so this is what our chart looks like at 10 o'clock on November 8th. That's our chart. That is exactly what the chart looked like November 8th. I'm trying to hide everything after 10 o'clock. Okay, that's our chart on November 8th. Okay, so I got long here on this candle. So let's see why. The 10-15 candle, it closed below the 10 o'clock candle. That's one buddy telling me high. That's one buddy telling me to hop in. Okay? So, this is where discretion comes in as a trader. And again, rules are your friends, but sometimes you break them. Sometimes you have to break them, and sometimes you don't. When should you break them? Again, that comes with years of experience. And I can't tell you when. But you got one buddy right here, 10-15, closed below 10 o'clock candle, telling me to short. And then my other friend on the sideline, like, hold on, wait a minute, be careful. I ain't. But he there though, like he right there. That's what this 10-15 candle represents. Some will look at this as a bottom and tell, and it kind of is. But again, what's my rule? My rule is you do not enter until the break of that candle. So I put my order in. I trust my one friend. I said screw my other 2 friends. So here, 10-15, the low of this candle was 43.95.25. So my entry should be below 43.95. I enter exactly at 43.95. I get in trade and I make money. Okay? So this is where things get tricky. On the 9th is where trade day stopped me out. This is when you look at my trade review for November 9th. That's where it says minus 50 plus 30. With trade day, I was minus 50 on the day. In my personal account, I was plus 30 on the day. However, on the 9th is where I broke a rule. And that is what got me stopped out of trade day. And I broke a personal rule and trade day rule at the same time. Okay, so you see this candle right here? When it says I short one contract at 43.95. Okay, that's a new entry. I should not have entered that trade there. And when I short, I got 2 contracts. And mind you, every trade that I made in this account, I put in a trade there. So you get 2 contracts. And that's what I did. However, what does the rule say? First thing first, did this 15-minute candle? No, I entered on this candle, so my analysis is based off this candle. So this is the chart. Let me fix this chart so we can y'all can see what this chart would have looked like in real time. Because these red and green lines, they move as the day progresses. So this is the chart. I entered a new trade on this candle. Okay, keep that in mind. On this 1045 candle, I entered a new trade. So let's go back. 1030. Did this 1030 candle close below the 1015 candle? No, it didn't. So that's one friend. I don't have no one telling me get short. That's ego talking right here. And I would tell you, I don't know why I did it, but I did. That's ego. Okay? So this happens. And the lower this candle is 43.96.25. So my other rule is I only enter on the breaks of candles. So my entry on this candle is supposed to be 43.93.25 or below. I should not have entered this trade above 43.93.25. Okay, so I did enter the trade at 43.95, which is good. So I followed that rule, and at that time, during real time, I was below the moving average. So I got one friend telling me it's okay. Just one. And mind you, I'm still short earlier from just one friend up here on this 1015, when the 1015 candle closed below the 10 o'clock candle. So I got one friend up here telling me to get short. Then I got one friend down here telling me to get short. But neither one of them are agreeing with each other. So me as a trader is the great equalizer. So I took the trade. I took the enter. And I got the trade. And trade day stopped me out because I hit the liquid, the trailing drawdown. However, my rules are my rules. So I follow my stop out rules, which we will get into at another time. And my stop was never hit. And you can see I explained that fully in my trade replay, November 9th trade replay. Okay, so you can see the results of that trade. But that was just explaining exactly what happened, why trade day auto liquidated my position. And again, any members from the trade day community, hopefully you watch this YouTube video. I might put a link to it. Just explain what I did on my behalf that I identified what went wrong. And again, that's another reason why you should have rules as a trader, and you should follow them. And your rules must be strict, and your rules must be repeatable, and your rules should not be based off emotion. Okay? So let's move on. Let's get our chart ready for the 10th. Let's get our chart ready for Friday. We're on our last day. So again, we connecting lows to the lows. Our daily line, our daily channel, we got a higher low. So we connect them. On our intraday channel, got a higher high, so we connected. High day here. Okay. So let's on the 9th. Here we go. Trade on the 9th. Let's find our 10 o'clock candle. So we hit our highs at 9:30. Let's connect our lows. At that time, okay. So that's what our chart looked like. On the 9th, this is our chart. This is Thursday. This is the day I lost my trade day evaluation, not Wednesday. Look at my trade replay on the 8th. I just explained it wrong, but I know I still follow my rules that day. So let's go on the 9th. This is what happened with trade day. So now I got to explain that whole scenario over again, kind of, sort of. Stick with me here. Okay, so 10 o'clock, this is what our chart looks like. Our highs are connected, our lows are connected. Where's my first trade? We are here. Short 2. Okay. Here, 10:30. Let's get our chart together. So I sat and watched and waited and did all that. So when I entered the trade, this is what the chart looked like. So why did I enter this trade at 10:30? Let's look back. The 10:15. 10:15 candle closed below the 10 o'clock candle. So that's signal number 1. That's one friend telling me to get short. And we also below the moving average. That's another friend telling me to get short. So what I do, I listen on a break. As soon as that break, 43.8875, I'm in. Right here with my entry, 43.8850. So I get in on a break of 43.8875. Okay? I get in 2 contracts. And this is why I broke the rule. 2 contracts, right? I'm fine right here with the 2 contracts. So let's zoom in a little bit. I'm going to put a horizontal line on the low. Here, 10:15 a.m. The low on this candle is 43.8875. My rule is for me to get short another contract, for me to enter a new position, this 10:30 candle should have closed below 43.8875 or lower. What did this 10:30 candle close? 43.8950. That closed above 43.8875. So that means I should not have entered a new position. But I did. Why? I don't know. I got greedy maybe. I couldn't tell you why. But this, you watch my trade replay video, everything was perfectly fine. I just got in. Maybe I was greedy. I'm going to blame greed. So, here I am at 10:45 with 5 contracts. And trade day has a $2,500 trailing stop. And that is when they liquidated me on this 11:15 candle because I hit that 2,500 trailing drawdown. So that's what happened. It was an error on my fault. I entered the trade, and again, my stop was 44.07, and it did not get hit but it hit trade day trailing drawdown. And again, if you watch my trade replay video from the 9th, you will see exactly what happened. However, I still follow my rules for my stop out rules, and I let the trade be, and then the trade ultimately rolled over. Okay, but however, you see this entry here at 12:45. I entered another trade. Let's go back and see if I follow my rules. 12:30. Yes, it closed below the 12:15 candle. Did I enter on the break? The low of this candle is 43.96. My entry is supposed to be 43.96 or lower. 43.95.75. So I did get in. And I put my risk reward at the ratio it's supposed to be. And I hit target literally 30 minutes later. And at that time, I had 4 contracts. So I only added 1 contract at this moment. But normally in that, so trade day, if they didn't stop me out there with 4 contracts, if they didn't stop me out here with 3 contracts, they would have most definitely stopped me out on this candle with 4 contracts. Is that just a risk reward with the $2,500 trailing drawdown? So again, in your own personal account, you do what you want. Follow your rules. If you have a profitable strategy, you'll be profitable. That's the best thing I can tell you. Your goal is to get your own personal account. Let's move on to the next day, and then we're going to close it out. Let's get our chart set up. We made a new low. So what we do, we don't move this pivot. That's there. You want to take this low, the most recent, you connect it. Now that's your new daily channel. Let's move this. You got a new high. What you want to do, you take your previous, connect. There we go. So that's your daily channel. Okay. Okay, so now we on Friday, on the 10th. Let's find our 10 o'clock candle. And again, the reason why I go straight to the 10 o'clock candle is because I don't trade before 10 o'clock. That's a rule. So it's easy for me to just skip all the other nonsense. Okay. Okay. So this is our chart setup at 10 o'clock. Okay. So I didn't enter the trade on my personal platform, personal account, but I did enter the trade on Tradeovate on the trade day evaluation. And the reason why I didn't enter it on my own platform because it was moving too fast. I put my order in on Tradeovate. I was trying to get my order in on here, and it just happened too quick. So this is the trade that, again, on trade day, I lost. Here we are at 10:15. Our 10:15 candle closed below our 10 o'clock candle. So that's one friend telling me it's time to get short. We are also below the moving average. That's another friend telling me to get short. What do? I get short. I put my risk reward in there, and guess what? I stop out. I take my stop here. 12:45. I stop out. And again, my trade replay video is going to be released at 4:31. So you're going to see me react to that loss at 4:31 today. And also, you're going to hear me explain my stop out rule in real time. So I'm going to reiterate it here because we're live, and then you're going to see me actually do it in real time while I'm live in the markets at 4:31 p.m. So the rule is when I stop out, I'm not allowed to enter a new trade until the next 15-minute candle close. Okay, so what that means is I stopped out on this 12:45 candle. I'm not allowed to enter a new trade on this. If I'm not allowed to enter a new trade on this candle, nor am I not allowed to enter a new trade on this 12:45. Okay, nor am I not allowed to enter a new trade on this 1 o'clock candle. Okay, so once this 1 o'clock candle closes, I'm free to do what I want. However, when I stop out, I have to wait for the next 15-minute candle to close before I enter a new trade. Okay, so that's what I did. And I didn't take my second trade that I took. I didn't take in this account. I took it only on the trade day. Excuse me. I only took it on the trade day evaluation, and it did turn out to be profitable. You will see that today, but I'm going to explain it to you. Again, this is why, once again, rules are important. So I stop out here. I can't get in no trades on here. So if I enter a new trade, and again, I know when I did, but I can't show you because the order's not on the chart, so you will see it. Right here, this is what our chart looked like in real time. None of this was here at the moment until this candle. So this 130 candle, we closed above this 115 candle. I got one friend telling me get long. We are above the moving average. I got another friend telling me get long. So I put my order in. So when you watch the video at 4:31, I'm going to tell you, the order's supposed to be 44.1650 or above. That was the order was supposed to be 44.1650 or above. That trade replay will tell you if I follow my rules or not. I put my risk reward in there and I made money. I ended the day down. So I did pay for I did get a reset, and I ended the day down just $225. And you will see that after I was initially down $800. So again, follow your rules, plan your trades your plan. New traders should trade larger time frames. First week with a prop firm has been very interesting. Shout out to the transparent traders. Trading rules matter and moving averages. That is our weekly trade review. Moving forward, I'm going to do these trade reviews on Sunday. It won't be this long. I was kind of long-winded, but give me a follow, send me some feedback, get some comments. I need to figure out how to get the chat on the screen so I can interact, but I'll figure that out as we go. Thank you for joining. See you Monday.